following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And as always, we like to meet at this time. All my buddies get together.
The following takes place between 2 p.m. and 3 p.m.
And what do we got going on today? Well, we got kind of the expected bounce I was looking for last week. This was the short covering rally. Fund buying. A lot of people think it's some kind of suicide pact. It is not. Fund buying says that they will be, depending on which fund you're in, they'll be mostly long within the last 2 or 3 days of the month, the first 3 days of the month. But it's not uncommon for them to wait if they're going into a weekend and just buy that Monday. It is not a suicide pact where they have to shoot themselves if they don't buy on that Friday. And a lot of times they'll just wait, give it one more day. It's more of a thing where it's kind of a more of an agreement than a rule. Anyway, so we've got a nice little pop. We're still up 11 points on the S&P, 2.3 billion shares. So volume a little lighter out here. But this, I suspect, is kind of be the pattern as we go into the end of the year. There are going to be a lot of people bearish, thinking that they need to be short right now. And the reality is that they're just grist for the mill. The market's probably put in its low for the year, typically. And again, all we know is based on historical norms. But I've got to say that the more that everybody decides to pound some of these stocks, and we'll look at some of them I'm using as an indicator, and the more that they get short, the more that I think that by the end of the year, they will cover those shorts and the stocks will pop. But it'll be a ratcheting action. The market will get thinner and thinner on volume. And as it does, it is an anathema. I don't get to say that every day. An anathema to shorts to see volume really starting to shrink, because generally they get squeezed when that happens. Anyway, as we said, 2.3 billion shares, so the volume's starting to come much more in line than it has been. Nice little bounce out here, still keeping a good deal of it in many things, but you can kind of see the wheat being, the chaff being separated from the wheat out here. And we'll take a look at a few more of these, but that's the beginning of it all. What do I have? Did I put that in the queue? Yes, I did. So what do we have today? We've got a little bit of history repeating.
That it's all just a little bit of history repeating.
On this day in 1996, Federal Reserve Chairman Alan Greenspan, speaking at the American Enterprise Institute, asks, "But how do we know when irrational exuberance has unduly escalated asset values?" So I ask, how do we know when irrational exuberance has unduly escalated asset values? And he said,
how do we know when irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions, as they have in Japan over the past decade?
Well, over the last decade, it's now 2 decades since he had that quote. The next day, the Dow Jones Industrial Average slumps by 1%. Over the next 3 years, the market nearly doubles. So is history, since they're out trumpeting this once again, does history once again repeat itself? I don't think so. I'm thinking that we get a little bearish come the first of the year. I just think everybody's probably, you just don't want to be, there's an old saying, don't be short a quiet market. and that one is what you have to kind of worry about. We had a nice pop out here, and we're still up 10 points. Now, what we really want to see is whether this thing can hold 2,200 on the S&P, more of a psychological thing than anything else. But two, do we get and start to scrape up a lot of shorts that will be grist for the mill as we head forward? That is my thought, and what my play will be. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can put messages in the den. It's kind of a quiet day out here. There isn't much going on. Nike had a little upgrade, which has gotten a lot of press today. Not exactly sure. Let's take a quick look and see how that is working out so far today. What did I do here? Oh, I was messing around earlier. So let's get all this stuff cleaned up. Let's go back to our beautiful white background. Let's turn on some of the things I like my power law vector indicator, my gaps, and my swing points. So it makes it real easy to see what's going on out here in the market. Anyway, nice little pop out here today already. I think I want that. So, you had a nice pop. Volume's about 7.7 million shares as we go into the 2 hours to go. That takes you right back up to where this thing started to fail back on the 28th of October. That had 9 million shares. So I think we can probably say we're at least going to attack that range. Now, this thing did come down on fairly strong volume of 33 million shares back on the 28th of September. That's what we're going to start running into on Nike. One of my subscribers actually bought calls on Foot Locker just about perfectly. We were talking about it. He said he was looking at those and bought those pretty much around $72. I suspect that he wanted to be out at about $76. I think it is. It's kind of hard to tell. But one of the things I talked about with him, he had a bunch of stocks that he was looking at and thinking about. And I said, you know what you really want is you want the most hated stocks in the world right now. You want ones that people are piling on short because guess what? As that volume starts to decay, any bounce we get now will be, and any move down will be on lighter volume. It becomes harder and harder for these guys to hold their shorts throughout the end of the year. And a nice little pop into that one. Another one that I don't know if he took it or not, he was looking at was Electronic Arts. Now, I disliked the move on EA other than buying it on Friday on the dip in that it's not that hated. It's just pulling back. But when we go back and look at his Foot Locker trade, what I do want to bring up, I don't have it right here. Maybe I should, I'll pop it up. What you really want to be looking at out here right now is NASDAQ short interest, and what do we want? Foot Locker. Look at what that one. There's another one. I'll find it when we come back. 6 days to cover on this little dude. And that's what you're looking for. You're looking for stocks with lighter volume where any kind of bounce would make it very tough on the shorts to hold. Foot Locker being consistent.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, we're coming in on 2.4 billion shares on the day. 2202 on the S&P cash, which is up 10 points. And again, we're probably going to see a lot of back and forth out here as people continue to try to pile on in a thinning market as we go through the rest of the year. So normally the idea is that you want to find a stock that has huge short interest and very narrow exits. And if you check out the NASDAQ site, they have all the short interest on NASDAQ stocks. They used to have them on NYSE too. Now the guys have cut that off. I'm not exactly sure why. I guess they don't want to help NASDAQ at NYSE at all. But there's some other sites out there. You can go to Yahoo. You can go to shortsqueeze.com and look at some of the high shorted stocks. Now, this uses data that's 2 or almost 3 weeks old, but it'll give you a trend if a stock is the kind of stock that has a very narrow exit, and that is the days to cover. What they do is they figure out the average volume and how many days would it take at the average volume to get all the shorts out. Gives you a good indication. Anywhere from about 5 to 10 is pretty ripe pickings for a squeeze. You don't want really much more of a position than 10% short in a stock, but better for me than just looking at the overall percentage is just how quick a bang for the buck will you get, especially if you're only trading these things for a 2 or 3 day bounce. You may have to sit in them while they go sideways for a while, but there's always that low-hanging fruit out there, which is the weakest hands of the bunch, which is retail short traders. They tend to be the fastest traders in the bunch, and if it starts to go against them, they start to cover. That means other people have to cover, and that means the stock goes up. And a lot of times, if they see a little bit of a smoke, the market makers will be more than happy to throw some gasoline on the fire and you can get some huge, massive pops out of a couple of days. And one of the better ways out here is to know that you've got, going into Christmas, you kind of got a floor underneath you. You're not looking for a lot of big surprises until maybe something like the week between Christmas and New Year's. They're not going to dump a lot of bad news on people. They're going to wait the day before Christmas. They're going to wait the day before the weekend for the New Year's to do their data dump of horrible accounting errors and everything else, and hope everybody's gone and clearer heads prevail when everybody does come back. But look for a lot of those long weekends, the same kind of thing. But look for, if you're trying to short stocks right now, the ones that you don't want to be are with these high data covers. Make sure that you know what that is going into any short. What else do we have going on out here? Got an email about gold. Andy and I were texting last night. I've given Andy a new name. Make commodities great again. That's his new catch line. Someone else might have used that. I'm going to say, Andy's making commodities great again. Anyway, Andy, heck, we were kind of coming back. And to tell you the truth, I thought everything in this vote weekend was already there. I didn't see a great deal why everybody was kind of a little worried about it. I heard somebody in the den, I don't know if it was a quote from a newspaper, but Brexit took a couple of days. Trump took a couple of, maybe an hour or half a day, and this took like all of 30 minutes to cycle through. I couldn't imagine that vote would have been more than 70%, but I thought it was. It was 65 or 70. I don't think it was close at all. I did see some articles that ran around saying, well, you can't tell what's going to happen. But I don't think it was ever close, as far as I could tell. At least the one in Italy, the one in Austria, the same thing. You got the far left-wingers, kind of the same, call them the Communist Socialist Party. In Austria, no big deal over there, kind of a smaller country. Although if that did go the other way, that would have been a surprise. But I don't think that was much in it. So that gold ends up being flat on the day, I don't think is a big deal. Somebody else asked me last week what I was planning on doing, and I was selling a lot of spreads in the VIX, just figuring that most of the premiums in the VIX would come out today. And, did I make some money? The answer is yes. Am I going to write home about it? The answer is no. It wasn't quite as dramatic as I thought. People still kind of a little nervous, although that VIX probably should continue to fall through the rest of the year into this year. I mean, it's off 11, 12%. I thought it might be off as much as 20% on the VIX today. And, you got a little lower out here. Am I going to probably get out of those? Probably will in the next day or two. But my guess is that nice spreads like that, where there was a lot of fat premium, it's just going to go to premium heaven and into my bank account. So we will see. But still one of the better bets for the weekend was that selling volatility to what is a little less volatility today. But premiums on both sides dramatically shrinking if you got into them around noon on Friday. What else do we have out here? Okay. It was me, Polar. What was that? I don't know what was me. You have to explain. Mr. UK. What else do we have going on out here? I wanted to look at a few other stocks. Let's get into those that were moving. It wasn't all that exciting. Again, it's kind of for a day we're up 10 points, you'd expect a little bit more excitement. For the most part, there were a handful of stocks out here moving earlier in the day. And what do we have out here? This one I thought was kind of a bad one that a lot of people were shorting. I didn't see the reason to short it, which is GW Pharmaceuticals. This is the only company that actually has a licensed to sell marijuana, the THC out of it. A nice spike out here today, actually got up in the 123 area. But it had a kind of nice test, 660,000 shares November 2nd. When you got into that with 777,000 on Thursday, but that was against the gap up of September 26 on 3.3.5 million shares. So either way you look at it, you wanted to see the volume probably shrink from Thursday. You got that on Friday when it got down to 578, and now you got the bounce out here with about 1 million shares. And again, you kind of filling up this gap in here, which is about 110 to 120 that this thing is setting up a range on. But certainly kind of a psycho stock. But again, I dislike shorting stocks in December, if you haven't already guessed that already. When we come back, we'll look at a few other stocks. Kind of popped a little bigger and now kind of pulled back a little bit. We'll see if there's anything in them. Then we'll get into the list of stocks that I'm looking at. I've made some signals on Friday, and we'll see how they did today. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And everybody, you can call me at 877-927-6648. Email me at path@tfnn.com. And, of course, post a message in the den. Okay, what else has we got going on out here? This one was one that I hadn't heard of much before. I knew what it is. Ocean Power makes little windmills that go underwater to generate power. Wanted to see how well this one did today. It's not a huge volume stock out here, so you can't get too excited about it. It's also one of the cheaper stocks out here. Nice little pop out here out of its consolidation that goes back to the 18th of November. So not a bad looking pattern. In fact, this is a pretty good example of a stock where you've got somebody each day out there that was just buying a little, just buying a little, buying a little. They're going to probably run this stock a little bit. I don't know the underpinnings of the fundamentals, if there's anything real in this one already. But this is how a bull market or a bull move starts in some of these stocks. And if we are getting ready to roll over, look for a few more of these to do the dries. Dries was kind of the first one. We're probably going to see a couple of others before the ends out. But if you are looking for signs that we are going lower, that would probably be much more likely if we see some more in that area. Anyway, what else do we have going on out here? Well, was there anything else in the other ones that I wanted to look at? Nah, we're just going back here to test 2200 right now. So nothing exciting. Last 30 minutes probably ought to be fairly exciting in the market today. We'll see what else happens out there. For ones that I wanted to see, there's AES. This one had kind of a nice 50% test of its previous low back on the 1st of December. 10 million shares was the low on November 4th. Kind of came into that. Actually had a little bit more volume, just a shade over 10 on the 14th. But you're starting to see this thing get some traction right here around this the $11 and $11 move. This thing kind of bounced out of it in the last couple of days with 5 million shares. What these are stocks are that you want to see go sideways for a handful of days, and then come January 1st or 2nd, if things look bullish at that point, maybe these things come out of their bigger trend out here. I think this one was also a Gartley pattern, wasn't it? Yeah, maybe it wasn't. Something else. Can't remember what. I keep looking at it. Oh, I remember why. So it had a bad quote in it. Other stocks out here that of interest is let's get this cleaned up here so it doesn't look like Custer's Last Stand. A Vanguard. A Vanguard? I guess that's what it is. Let's take a quick look at this guy. See what this one's doing. Energy Services Company, holding company, generation, transmission, distribution, electricity. Must be an electric company out here in, where is this? Washington, D.C.? Buckfield, Norman, Hebron, Georgetown, South Bristol, Destin, Washington. Where is this? New Gloucester. Yeah, it's got to be up in there. So anyway, this company is a energy company. I guess you guys up north probably know it. But this has kind of come back to this level. Wanted to see how some of these had been hanging on. He had just a smack too much volume out here. These things could break. The next logical move out here for quote, quote, safe stocks is down to this December 18th, 2015 low at $32.45. So some of these are coming back, which means, of course, normally that means that a little bit of the worries coming out. Alder Biopharmaceuticals, ALDR, has been bouncing off this $22.30 level for a while. First bounce was on June 22nd, second one November 3rd, and we got one on December 1st where it went just a little bit lower. A million shares is kind of what this thing's been doing against the bounce of March 28th that had almost 15 million shares. So you're bouncing along this thing with about 1 million shares. Pretty good risk-reward ratio out here. Again, you're looking for stocks with a lot of short interest if you're looking for anything that's going to bounce before the end of the year. If not, what you want these things to do, and you want to watch them over the next, 20 trading days before the end of the year, 18. You want to watch these things go sideways and lose a lot of interest. If they start getting interest, then maybe they're more likely to break down in the coming year. But you'd like these things to come out. This is kind of interesting. I liked the pullback in the IBB in the last couple of days. I like the fact that this thing has come back into this gap up of the 9th of November that had 11.3 million shares, 2 million shares on the first. On the second, we had 1.7 million shares. Today, a light volume bounce. I was thinking 267, which we kind of got on Friday. And could we get down in there maybe 265, maybe? A lot of light volume out here, but this is one of the more heavily shorted ones out here, but we'll watch over the next couple of days. But my guess is that if any kind of thing gets going on in the IBB, you're looking at $300 at the end of the year on it. To keep a close eye out here as we slowly pull back. What do we have? 1.16 billion shares on the NASDAQ and 2.52 billion on the NYSE consolidated tape. We have a question to look at the IWM. And, you're back up today. Not a lot of volume so far. 17.5 million shares. It's not bad, but you came down on 32 million shares on the 28th of November. So you're kind of coming back up in the light volume. But again, if there's a time when price and volume has to be given a little bit of leeway, it is in the last couple weeks of the year. My guess is that there are far too many people short the IWM. This thing could probably get up to 136, 137, and just tick up a little bit every day into the end of the year. May even get higher than that. But my guess is you're going to have one spike. It's going to run all the shorts out. It'll probably pull back a little bit, but probably still going to end of the year target 134 to 137 out here. You might hear a spike to 140. I don't know. What else do we have? Oh, okay. Thanks. I couldn't figure out what MCGA was, and that is make commodities great again. Okay. I thought maybe someone was going after some stock that I didn't know about. Anyway, a very interesting day out here. What do we got? We got a few more stocks to look at. You can call me. You can email me. But we will look and talk for the rest of the day. Most likely, the most interesting is going to be the last 20 minutes of the day to see what people are actually buying on this last day on buying.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And the SodaStream CEO is out blabbing on CNBC right now. I just wanted to take a quick look at that. A little pop back up. This thing has been a rocket. And I can't really... When this thing had fairly good earnings last time and bounced up here to the August 16th high off of those late August earnings, was really trying to figure out what was going on. I went to Bed Bath and Below and Beyond and Far Away in another universe, in another galaxy. I never really saw what was going on there. I talked to the people at Bed Bath and Below and they said they didn't really see a lot. I don't know where this business is coming from. I would have liked to have been able to take a look at this, but it's got all the signs of everything going well. Maybe this thing is coming back and I'm unaware of it. But a nice pop up here and even a little higher today. But this thing's looking pretty close to figuring out that it's probably finished its ABC. Maybe an interesting pullback to about 30 or 29 on this on lighter volume. But I don't know. Nice run, though, but I just don't know where it came from. What else do we have out here? Which utilities do you think are the most vulnerable to short interest on an interest rate hike? Gulf State, Dookie, Southern Company. This is an example, Florida Power and Light. Warren in Denver's got a good question out here, and that is, with utilities being kind of the safe play, where you get your nice premiums every once in a while. You make your 3 or 5 or 7% off these things, and it's a place to park cash. What happens when banks actually start going up against these folks? And that's a very good question. I'm going to have to look a little bit harder, but my guess would be the ones that can't raise the energy rates the most. And since I know Florida Power a little bit better than some of these other ones, I would probably think, especially in the South, it's going to be the hardest to raise rates, and those would probably be the ones that I'd be looking at. We're not going to be using a lot of power come this winter, not like you guys in the North. And I had to break out my winter jacket here. I think you guys in the North, you call them windbreakers? Anyway, it's my winter jacket. It is it's kind of tough, but you want to probably, my guess is you probably want to go against companies that have the hardest problem raising rates, and my guess that's going to be the ones in the South out here. And one, they're not going to have a lot more demand like the companies in the North. And, you know, if you get a nice big run in a very cold winter, it's not uncommon to see these electrical companies run up the rates, and that can disguise the problem with interest rates for a while. So I would think South, but that's I haven't done a lot of research. That is a question that's going to take some research to figure out, and some knowledge to actually figure out what's going on in that. What else do we have out here? Okay. The VIX is dead, getting email like that. Okay, what else can you say? Brunswick Corporation wanted to see how this broke its previous high of April 27th. That had 1.2 million shares. Got into it with 1.9 million shares on July 27th. Tried again, didn't quite get there on September 22nd. Things been banging this against this range, getting pretty close out here. You had 1.5 million shares as it went right into that previous high on the 1st of December. So this is not looking too bad. Like I said, we're going bowling again. This company's bought and sold so many different things that I'd have to go back and check it out again to find out what they actually do sell these days. But I think they're still into that. Fortinet, Mercury engines, boats, they're still into that? Or are they out of it? Bowling long gone. It tells you that most people are pretty amazed when we talk about who was the biggest pump and dump of all time. And most people don't know it was the bowling alleys in the late 50s in the stock market. These things went to levels that make you think that the dot-com bust was ludicrously small. Everybody was in the bowling business, and everybody was trying to go after it in the late 50s. You go back and look at those charts at those bowling companies, it's laughable. But they were the dot-com rock stars of their day. What else is going on out here? Nice, beautiful, sweet, succulent. Oh, wonderful test of a low. The only thing I wish is the volume on the way down wasn't as strong as it was. It was a little too strong for me. Kind of like a Cuban coffee. Fortinet had a nice low at $29, October 12th, 21 million shares. Got into it with 1/10 that, the December 2nd low. But energy off this November 15th high at $33.50, came down a little bit. But this is something I want to keep an eye on out here. This thing has its first bounce. It's now going to figure out probably a few more along the way. But if this thing continues with, 1 and 2 million days around this $29 level, you want to keep a good eye on that, because you'd have a run from about $29 back up to $34, which may not, in a next year, it may be very tough to make earnings. This one looks rather interesting out here. I kind of like what this thing is setting up as. Again, if you're thinking about buying a stock because it looks chart real good, probably wait until next year. If you're talking about buying a stock to watch a bunch of shorts squeezed, probably look for something ugly and hated out here, because you're probably not going to get much in a stock that's loved. It'll go up a little, and then that'll be it. Helix Energy Solutions, trying to break out. Not a lot of volume so far today, so you want to keep an eye on this one. Just a little under 1 million shares, where it had October 20th, 4.3 million shares. So you did have 3.7 on the 30th. You had 2.9 on the 1st. Friday, you had 2.2. So, not uncommon to see these things kind of hang around at these highs. Some of these things look like they could launch if the market does not, the wheels do not fall off the wagon come January 2nd when we come back, which is actually January 3rd, right? Is when we come back. So that will be, anyway, interesting. International paper. I wonder how many of those guys get really bad paper cuts. Anyway, I wonder if they have figured out what to do about those. It's got to be an occupational hazard out here. Now, we're looking at the September 19th high in international paper, 49.90. We broke through that on Friday. Did we do so on higher or less volume? What does this tell us about what's going on? Why is international paper very interesting and a canary in a coal mine? We will answer this and more.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Like I said, not a big deal. We're at 11 points on the S&P cash, volume 2.65 billion shares as we go into the last segment of the show. See, this is Monday, so we've got to Tom O'Brien for the next 2 hours. I don't think that there's much in the way of earnings after the bell tonight, so it'll be kind of a quiet after hours. May give a little chance to take a look and see what happened in some of the other commodities today and how the market closed. My thought is that the last 30 minutes will be very interesting today, and that will be, we got kind of a little tug of war going on, and the question is who lets go first, who blinks. And my thought is any close above 2,200 going to be a little psychologically hard for a lot of people that piled on short today to hold those shorts through the end of the day. I would not be surprised to see us close up about 22.10. I'm thinking 22.10, 22.30 through the end of the year. And what's going to happen is it's going to be kind of a round robin. We're going to be out here doing the whack-a-mole on these stocks that are way too short with far too light a volume kind of popping. We were talking about international paper before the close. The reason that this stock is important, you want to keep a look at this and some of the other paper companies out here, is guess what? When lots of stuff is shipping, it needs cardboard and cardboard containers. When you're making all kinds of things for the house or other things, kind of a good canary in the coal mine stock for general retail sales out here. If this thing's kind of moving, then generally that is the direction of the market, or the S&P, not the NASDAQ, but for the S&P, kind of a good thing. You know, you got some fairly nice movement out here, but what you do have is international paper finally coming and finishing this gap down that happened in June 22nd of 2015. This thing came down with 8.3 million shares. Now we're going into that with lighter volume, but this is where we're going to find out a great deal in the coming weeks and months as to whether or not this is a fluke, whether this thing can hold this kind of price. And that's going to tell us kind of what's going on in the shipping departments of a lot of companies that are shipping dog food, and anything that you buy now has got paper around it. International paper is making that cardboard and paper. When things are good there, generally, industrially, things are good here in the United States. 2.67 billion shares in the New York Consolidated Tape. Also had a question out here from someone. I didn't see much in this stock. He did, and he bought it. Wants to know what he should sell it at. I don't know a lot about this company. I think the reason I probably didn't like it is when he bought it, this thing, I didn't see it going past this huge gap down that set up on the, August 10th of 2015. This thing came down with 450,000 shares. It's now into it with the best day being 310,000 shares. Actually, 420,000 shares yesterday. That's kind of all I could see in this one right now. I don't see a lot of short interest in it. You do have to like this thing had a pretty good rocket motor off this October 25th. If you do like this one, I'd probably be out of it. This thing had a big candle back on the 15th of November, and you'd want to try to get into that about as good as you could, which would be about $27.50, $28. So if you could get a pullback and get it there again, try for a next one. My guess is it's going to take a little while to bust through this $35 low. In the meantime, sell when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.